Hi, everyone. Welcome. Thank you for joining us for our BGR members-only webinar exploring our recent report on the Convention Center hotel deal. My name is Heather Sweeney, and I serve as BGR's Director of Development, and my role is focused on engagement with our members. I'm joined today by BGR Senior Vice President Stephen Stewart and Senior Research Analyst Paul Rue. Paul was the lead author of the research report we released last month. It's a big deal, analyzing ways to reduce public subsidies for the Convention Center hotel project. We're holding this webinar today to walk you through the key findings, take your questions, and discuss next steps as the deal moves forward towards final approval in the coming months. I'd like to note that this session is being recorded in case we want to use BGR staff remarks for social media. You can ask questions anonymously in the Q&A. We will not use anything from your questions to protect your privacy. We're hosting this briefing just for our members because your support makes this work possible. This webinar is a way to keep you informed, connected to our research team, and equipped to help advance the recommendations that can strengthen local government and improve outcomes for Greater New Orleans. We're grateful for your investment in BGR and in a brighter future for our region. I'll now turn it over to Stephen to kick off today's discussion.
Thank you, Heather, and welcome everyone. Our report on the Convention Hotel project is a great example of BGR's work to provide accountability and insights for the public's benefit. The report grew out of our government monitoring. This continuous effort helps us to identify important local public policy issues where BGR research can add value in a timely manner. Paul and the rest of the research team track more than 70 public entities in Greater New Orleans. Paul has followed the Convention Center for many years and watched its hotel project evolve. The public investment contemplated for this private project would be among the largest we have seen in New Orleans. As Paul will show us, BGR's report shined a light on the proposed public subsidies. It also offered several ways to reduce them while still allowing the Convention Center to move forward with an important strategic project. Paul, I'll let you take it from here, and I'll rejoin you when it's time for the Q&A.
Thanks, Stephen. As Stephen mentioned, our focus with the report wasn't, we don't take a position for or against the project itself, but what we did is looked at the financial components of the project, the public subsidies. And what we found is there are several ways that you can significantly reduce those subsidies without really impacting Omni Hotel's bottom line, their profitability for the project. And so there are ways for the convention center to achieve its long-time goal of a convention headquarters hotel while also, again, boosting, saving money to address other needs. And so here is just a lay of the land. This shows, the 11 block long convention center hugging the river. Previous iterations of the hotel project had located the hotel at the upriver end where the river district development is starting to take shape. Currently now, this deal would move the site downriver to the sugar mill site. And you can also see the Hilton Riverside, which currently serves as the Convention Center's headquarters hotel. And so, again, the Convention Center has been pursuing a headquarters hotel for more than a decade. It views such a hotel as important to, draw larger conventions, increase attendance, and, keep pace with other other cities that are adding such hotels attached or adjacent to their convention centers. And so the most recent iteration of the project was that we wrote several reports on during the pandemic. That project, which involved 5 entities, was scuttled when the financial entity pulled out, due to the uncertainty of the convention market after the pandemic. And so now what we have is a much simpler deal. Again, that previous deal had 5 entities. Now we just have one. Omni Hotels would develop, build, and operate a 1,005-room hotel at a cost of about $600 million. And just for perspective, it would be the 5th largest hotel in the city, and the first with at least 1,000 rooms to be built in more than 40 years. And so, the convention center and other proponents of the project point to it as being not just an economic catalyst, but sort of a symbolic catalyst to spur growth in the city. The Omni is sort of an industry leader in these headquarters hotel projects. It has at least a half dozen or more across the country. And for the convention center's part, it views the hotel as kind of the centerpiece of a $1 billion plus capital campaign that includes the River District mixed-use development as well as a comprehensive renovation of the 40-year-old convention center. And as again, looking at the finances for the project, we do have some concerns about the size of the public subsidies, particularly tax rebates that Omni would receive. The hotel guests pay taxes on the room charge, and then patrons at the bars and restaurants in the hotel will pay sales taxes. And so a portion, roughly half of those taxes, would be rebated or given to Omni as to help ensure its profitability. And so when we started looking at this, we were a bit surprised that was no available estimate on how much those tax rebates would total. And so we requested some information from the convention center, and we were able to arrive at an estimate that over 45 years, they're worth $837 million. And so our analysis suggested that there wasn't a demonstrated need for a subsidy of that size, and so we came up with options to reduce it. The convention center wants to wrap this up by the end of March. It's looking like it may take longer than that, and there's just a number, a half dozen or so different approvals that they need before going forward. The height and zoning variances the city would have to approve. The city would need to sell a city block to expand the whole hotel site. The city would have to approve a property tax incentive, and then a couple of state entities would have to agree to join the convention center in forgoing their tax revenues from the hotel. So a lot still has to fall into place to make this a final done deal. And so why does it matter? Well, we've shown in a number of reports that the inefficient use of taxes in one area, obviously is going to limit the amount of revenue you have for other needs. And so, saving on this project could help provide money for improved drainage, streets, and other public services that benefit both residents and visitors alike. And just a quick overview of the subsidies, the convention center expects to pay nearly $24 million for the hotel site. The convention center will make an $80 million upfront investment payable to Omni to help cover the $600 million construction costs. Omni will cover the remaining $520 million and any cost overruns, limiting the public's risk in this project. And then, of course, the aforementioned tax rebates. And then another public subsidy that we don't yet have quantified is a payment in lieu of taxes, or a pilot that Omni would receive, and we'll talk a bit more about that later. So this results in a gross subsidy of about $940 million, and Omni would make various rent payments and then profit sharing payments to the convention center that would reduce the net subsidy to about $669 million, which, as Stephen mentioned, this is by far one of the largest, if not the largest in memory, the largest public subsidy of an economic development project. And anytime you're looking at, revenue streams of 45 years, it's important to be able to look at the present value so you can make apples to apples comparisons to different scenarios for structuring these tax rebates. And so what the present value calculation does is it applies a discount rate to a multi-year revenue stream to sort of estimate its value in today's dollars. If you had a lump sum today, that it would be of equivalent value to the revenue stream. And so for for a public entity like the convention center, you usually would go with a discount rate of 5%. That's roughly what the convention center could expect to earn on an investment. And so at that rate, it would reduce the $837 million in rebates to a present value of about 283 million. You can see that with the lighter blue. And now it's interesting when you look at the conventions, or excuse me, Omni, from its perspective, it seeks a much higher return on its investment, and so it uses an 11% corporate discount rate that reduces the cumulative value to down to a present value of $127 million. And you can see that it really, from Omni's perspective, in the later years, the tax rebates are negligible. In the last year, the cumulative value that Omni would receive is $30 million, but it would value that at just $300,000. So again, almost a negligible amount. And this is just really the kind of the key takeaway here is that you can, in the later years, the tax rebates have far more value to the public than Omni. And so you can kind of use that to restructure the incentives to, save money for the public, but still leave Omni whole and not really reduce their projected profits. And so this is just a quick look at which entities would forgo or rebate their taxes to Omni. At the top, you have both the state of Louisiana and the Louisiana Stadium and Exposition District, which operates the Superdome and Smoothie King Center. They would both forgo an estimated $250 million roughly. Now, the convention center still needs to negotiate agreements with those two entities to forgo those taxes, so that's not yet a done deal. The convention center itself would forgo about $190 million, and then an economic development district that the convention center controls would rebate about $127 million. And so we asked the convention center, what evidence do you have that demonstrates the necessity of these tax rebates to make the project feasible for Omni? And what they told us is that Omni needs to, again, to hit that 11% expected profit or return on its investment, that amounts to about $57 million a year. And that's represented by this flat bar running across this chart. And then the blue bars are the projected operating profits for the hotel. And layered on top of that, then, and the orange bars are the tax rebates. And so, the convention center presented us with 10 years of data, and the first 10 years show that, yes, the tax rebates are necessary to clear that 50s, that profit target for the first 10 years. But we kind of projected that out using the same assumptions that the convention center did. We projected that out for 45 years, and you can see that the operating profit, the blue bars on their own become enough to reach the profit target and far exceed it to where by the final year, the hotel would have and its operating profit double its target, and yet it would still receive $30 million in tax rebates. And so this suggests that somewhere, perhaps around year 20, the case for continuing the tax rebates starts to get weaker. And so we looked at various options that you could be employed to, again, reduce or sort of right size or restructure the subsidies without, saving the public money, but without without having a large impact on Omni. The convention center told us Omni is not interested in renegotiating the deal, but is willing to look at options that would give it, revenues along the lines of what the current deal would provide. And so one of the options is to end the rebates after 20 years. This is kind of in line with norms and best practices for public involvement in economic development projects. That usually after 20 years, the development has become profitable and no longer needs that support. And so that would save, in present value terms, the public about $106 million, while reducing Omni's revenues by about $21 million. A variation on that would keep Omni whole or revenue neutral would be to end the tax rebates after 20 years, but give Omni a $20.7 million lump sum payment up front to offset the lost revenue from by ending the tax rebates early. That would still save the public about $85 million, while again having being revenue neutral to Omni. A third option would be to just you know provide no provide a lump sum payment that upfront that's equivalent to 45 years of tax rebates. And so the tax rebates then could be used to finance bonds that would, to make that upfront payment. And that would save about almost $100 million from the public's perspective, while again having no impact on Omni's revenues. And it's worth noting that this model has been used in several hotel projects that Omni's involved has developed. And Omni has confirmed to us that they're agnostic, or it doesn't matter to them whether they get the money spread out over 45 years or an equivalent amount in a lump sum payment up front. And then the fourth option would be kind of maximizing the public savings by giving Omni a lump sum payment equal to only the first 20 years of tax rebates. And so then you can see that the savings are higher for that, but again, it would have a reduction in the value of what Omni would receive. And so we too are kind of agnostic, or we don't have, we aren't ranking these. We think each option could save substantial public revenues for other purposes. And again, we're encouraged that the convention center has said that they are exploring options similar to what we have laid out in our report. And so, and let's just move on to a brief discussion of the one public subsidy that's it's still unknown what the value would be. It's a payment in lieu of taxes, or a pilot. And what that is, it's an economic development incentive in which a developer pays a set or agreed upon amount instead of paying variable property taxes. And so this gives the developer greater certainty, and often maybe there's a savings over what they would pay in property taxes. And so the agreement with Omni would set the payment at the average per room property taxes paid by 7 competing hotels. Omni's concern as the brand shiny new hotel on the block that it could be assessed at a much higher rate and pay much higher taxes than its competition. And so it kind of wants that predictability of tying its tax rate to the rate of its competitors. Now, it's noteworthy the pilot would not apply to the Orleans Parish School Board's taxes. The school board would receive the full amount it would get if the hotel paid property taxes. The rationale is that the schools are an essential public service and important to the workforce in the city, which aligns with the convention center's needs and interests. But that does raise the question of why not exempting other entities such as the city and the Sewerage and Water Board, which obviously both provide critical public services. And so we found that best practices, if there is going to be a pilot, that it should be limited to 20 years, and that it should gradually increase to where by the end it's at the full taxation level. And so, as far as our recommendations, what are we asking, policymakers, public officials to do based on the findings in our report? And the first and most important is, for the convention center to negotiate with Omni to reduce or restructure the tax rebates by either shortening their term, or, to align with the demonstrated need, or replacing them with a lump sum payment. And we strongly recommend that, a maximum term for any rebates be 20 years. We're also calling on the state and the Louisiana Stadium and Exposition District to scrutinize the size and duration of the requested rebates that they're being asked to make. There's a potential that they could save some of those revenues to apply to their own capital needs that support the city's economy. And then finally, the city administration, city council, which would have to approve a pilot or payment in lieu of taxes, should evaluate the necessity of such a payment, such a pilot, and work with the convention center to limit any pilot to a maximum of 20 years and also bring the hotel project up to full taxation over the course of the pilot term. And so with that, I guess we'd like to open it up for questions.